Eric Muathe at Muathe.com. Let's take a look at the chart for ALRM, and we are taking a look at the weekly chart, all data, and I want to show you that there are some things that are developing here, so we can use this as a live study chart to see whether the charts are telling us what is potentially about to happen. So I'm going to share with you 4 things that I observe here that are causing a problem here visually. Let's begin with number 1. We got the previous closing high there, and the level to watch was at 30.83, which happens to be this weekly closing high. And then there's another weekly closing high a couple of months after that, and this was at 31.11. So what we see here is we have 2 failed breakouts depending on how you want to look at this. We got the first failed breakout here. It closed above 30.83 during this week here, but subsequently failed to hold above that. That's a failed breakout, which is the reason why it had to reset again. Now, over the last 2 weeks, we've seen an attempt to stay and break out above both levels, the previous weekly closing high here of 30.83 and the recent all-time weekly closing high of 31.11. After spending a week above that, it looks like now we are back below that level. In fact, back below the 2 price breakouts. In other words, in simple terms, it looks like the stock has been trying to break out over the last couple of months, and if we take the previous weekly closing high of 30.83, which is this weekly closing high here, we can see failed breakout here on this multiple week attempt to stay above that price, and we can see here looks like the early signs of a failed breakout. Keep in mind, failed breakouts are notorious for taking stocks lower. So that's one consideration that seems to indicate a little bit of a bearish idea, as long as the stock is unable to break out on the weekly chart, especially more so if it cannot hold above 30.83. Let's go to point number 2, which is the uniformity resistance. You can check the description for a link that describes this in detail. And what this does is we go figure out where it broke down. In terms of the RSI, this was the break of the highs there, some type of a warning high. You pull back slightly, you come back and try and move above this level, and we see we actually formed a triple top here, here, and here for this confluence of highs over here, and then we pull back, of course. Now what we see here over the last couple of weeks, we've hit that line with uniform action. We seem to be coiling down. That by itself becomes reason number 2 why visually the indication seems to be that the next major direction is down, unless the stock can move above the current resistance on the weekly chart, or unless it can move above this level here. So that's the second visual cue that the stock is facing some challenges. Let me share with you one other line. This line goes back to the recent break. So you take this line here, and you can see that there was a trend break recently during this period here, which brought the stock lower. We dropped and went sideways for a couple of weeks, couple of months. What we're going to do here, we're going to extend the same line, and without any type of adjustment, we can see that in the current market over the last 2 weeks or so, we've hit this line and we are being rejected. In other words, look like a backtest failure. That is another reason why visually looks like the next major trend is going to have to be down. Let's take a look at also the idea of negative divergence. So we see here we made a high, RSI stops right there. We improve in price, we close higher, So there's a price improvement, but the RSI makes a lower high. That is negative divergence, which leads to a shallow pullback. Again, we make another high in price, which is now higher here. And now we're making an even lower high, and that again is negative divergence. Keep in mind, the most recent high on a weekly closing basis here comes at the expense of the RSI, which is failing to hold above 61.8. Failure to hold above 61.8 on the RSI while a stock is making all-time highs or making 52-week highs tends to be the worst type of negative divergence. So there we see the 4 reasons why I suspect what the chart is telling us is the next major trend as far as this stock is concerned looks like it is going to have to be down. So let's do a quick recap, and we begin here with the negative divergence, improvement in price highs, improvement again with yet declining RSI strength. RSI fails to hold above 61.8 during the most recent weekly closing high. That's one negative. Let's go to the next negative, which is the backtest failure line. As you can see, broke down here. We extend the same line, and as of right now we've hit that level and we seem to be rejected. That's number 2. Number 3 is a uniformity resistance line. Going back to this break, we draw a line from there off the highs here, gives us a line. Every time we hit this line with uniform activity, we know that sentiment is being rejected. So recently we've hit that line and already we are responding to it. And then the last one is the failed breakout levels. As the stock recently was trying to break out above the recent weekly closing high of 31.11. It closed above that last week, but as of right now, early on the week, we seem to be back below 31.11. Failed breakouts are notorious for taking stocks lower. Those are the 3 reasons. Let's use this as a learning example to see whether the charts can be reliable in predicting the next major direction, again, which here we see the charts are indicating at this rate, the next major trend is going to have to be lower. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings.